Hello everyone, this is Roman Bogomazov at wyckoffanalytics.com, and this is our weekly Wyckoff video blog. Today we're going to be discussing a trade that I've conducted on November 15th of this year, 2016, post-US election in S&P 500 E-mini. And specifically, I'll talk about some of the selection and entries ideas. So here is a chart of the US session, which starts at 6:30 for me Pacific time. And in this video, I'm not gonna go into the rationale of why we're choosing S&P 500, how do we define the directional bias for that particular day, and how do we anticipate a trending day out of this environment. We're only gonna concentrate on the entries and some of the selection ideas. So our first entry comes after the reaction that goes into the beginning of the US session, and we're placing the stop loss below the low of that reaction. And obviously we could see right away that our stop loss is being hit. So we are early into the session and we already have the loss. And we'll discuss the technicalities of how we could avoid this loss and how technically and analytically we could change our selection and determine a much better entry for us. But I want to stop here a little bit and talk about the emotional component of this loss. In a lot of cases, what I see from my clients, students, and early on in my career, I did this myself, there is a tendency to withdraw from this trade right away after the loss. And it's all understandable. Loss is always has an emotional connotation of pain for us, for the traders, and it's deeply rooted into our psyche. So the emotion that we have and the tendency is just to fly away, to go away from this instrument and from your original analysis. My advice would be to still continue observing, watching the instrument, the price action to unfold, and seek any type of confirmation for your previous analysis. And this is what I've done with this particular situation. I was a little bit late on the second entry. My preference probably would be the close of this bar right here, but I was looking to have a more confident trade after the first loss. I wanted to see a reversal above the high of the less significant bar to the downside. And I've increased my stop loss just in case if we're gonna have some kind of trading range. I do not want to be hit again with the stop loss. And obviously this trade is a profitable trade for today, and it goes into the next day, so we should be happy. But the question is always, how could we improve? How could we improve our analysis? How could we improve our execution? And specifically the question that I'm asking for this situation with the first loss is, how can we avoid a whipsaw exit on our first position? So let's look at the structural analysis and comparative analysis for S&P 500 and NASDAQ 100, ES and NQ. And again, I'm not going to go into the rationale of why we're picking these two instruments post-US election when the industrials, materials, healthcare, financials are all outperforming. If you want to go into that type of depth of the analysis, come to our website, sign up for our classes, whether it's in Advanced Wyckoff course or Wyckoff Practical or Market Outlook, and you will get much more in-depth discussion about those concepts. But specifically here, I want to start with the potential phase C that we observe going into the UK session, European session, and this low is being confirmed in both S&P 500 and NASDAQ as a phase C as the price starts to move out of the trading range. And we're seeing that our trade that was initiated in this red box right here is actually much weaker on the entry than anything that we've seen in NASDAQ 100. So we're seeing that NASDAQ has produced a quite substantial rally that we don't have we can't compare this rally to the ES rally, S&P rally. We're seeing that the rally in S&P is actually failing even to reach the resistance level of the upsloping trading range, whereas in NASDAQ, the price not only moves much better on the increasing spread and the increasing demand signature, but we also seeing a commitment above the resistance, and the next reaction is a very shallow reaction, and it's in the upper part of the rally that we have observed. On the contrary, the reaction after the failed commitment to the upside in S&P is more significant and actually tries to go to the support level and maybe stops around 1/2 of the range. So both the rally and the reaction in NASDAQ are much, much stronger comparatively, relatively to the S&P 500. So therefore, our first entry point should have been in NASDAQ rather than in the S&P. And look what kind of different trade we would have here. Instead of going down and taking our stop loss, the reaction in NASDAQ based on the comparative analysis is again very, very shallow and much stronger than the one in the S&P. It would not take us out after our point of entry right here. And this would be a very good trade to the upside, where we would be exiting on the change of character bar, and this is our trade right here. So from this point of view, ES was not the best selection at this structural spot, and NASDAQ was a much better selection at this point. But what's interesting is what happens next. So let's look at the next chart. And we are looking at this trading range right here. And we are trying to identify our phase C or phase D for the next point of entry. And we're seeing very easily on the S&P that most likely we're experiencing phase C here with the minus spring, where the price slightly undercuts the support and has some kind of attempt to sprint below the support, and yet the result of that sprinting action is not substantial. We are instantly coming back into the trading range. There is some kind of testing action at the higher low, and we are also observing that the levels of the supply actually contract from our potential phase A in the trading range into phase C. And that's what we want to observe in a bullish pattern. So when I saw this bar right here, and even though I was already in the position, I was really excited. For some of you, this bar might be a little bit scary, and understandably so, because the bar is increasing, there is more velocity to the downside, but you need to understand, what's happening with the effort behind this type of the result, and also what kind of confirmation after this price action we're going to have. Now, looking at the NASDAQ chart, we're seeing that the NASDAQ undercuts the support in much more meaningful manner, and also from this perspective, NASDAQ becomes weaker at this spot, and there is a slight increase of the supply going into the potential phase C for NASDAQ. And therefore, we could conclude that anything out of the testing action right here would be a much better trade in the S&P rather than NASDAQ. We effectively would be making the same trade as we've done from this area right here. It's kind of like the same price level. So in terms of the levels of the efficiency, we are definitely giving up a lot of the P&L here, a lot of alpha, just because we are not trading NASDAQ at the most opportune time. We're also staying in the position much longer, so we're exposing ourselves to more risk in the market. And our goal is always to be exposed to the least possible risk in terms of the time and in terms of our actual risk, and to gain the most profits out of the shortest period of time in the market. So from that perspective, obviously, the trade in NASDAQ early on in the session is the most efficient trade, and then the trade in the S&P after the consolidation based on the comparative analysis and the structural analysis seems to be the most efficient after that. We're seeing how S&P is committing above the resistance and actually traveling quite freely with a lot of demand increasing signature, and whereas NASDAQ is just touching the high of the resistance that was created by the previous high. So this is our analysis for this particular trade. Thank you for viewing our blog. And for those of you who wants to submit the trades, your completed trades for our Wyckoff review, email me at wyckoff.associates, wyckoff.associates@gmail.com. With any type of trades that you want to submit, please send me your chart, include your points of entry, initial stop loss, exit points, a brief discussion of your intention for the trade and your logic behind your analysis and your trade management. And hopefully I'll make the video blog out of that. Thank you for watching. Happy trading, and for any other educational offerings on Wyckoff method, please come to our website wyckoffanalytics.com. Thank you.